said, the headline inflation rate did fall more than the market expected. The headline inflation rate eased by 0.7% in the month of May, and that took it down to 4% from 4.2% where it was in April, as you said. Now, this had a lot to do with the fuel excise cut. It was the second month of it being experienced in the economy. We also had a rising dollar in the period, which made fuel cheaper. We saw automotive fuel inflation down from 19% to 8% in the month. But we also saw housing, the biggest contributor to rising costs in the economy. Electricity was up, rents were up, and house prices themselves were up quite sharply too. So we're seeing this idea that as the electricity rebates start to drop out of that headline calculation, the fuel excise cuts come in, and there's quite a lot of sort of subsidies muddying that headline picture. So when the ABS strips out the top 10 to 15% of price movements and the bottom 10 to 15% of price movements, you're left essentially with this underlying read, the core. Now, that is not falling, it's heading in the opposite direction. So stripping away the volatility, we saw the core inflation read up 0.4% in the month of May, which took the annual core inflation rate, or trimmed mean as you've been saying, to 3.6%. Now, we know that the RBA is tasked with keeping inflation between 2 and 3%. This is well over 1% outside of that target band, and the RBA doesn't expect to reach the midpoint of its target band for this underlying read until 2028, so that's a couple of years away, and obviously it's heading in the wrong direction for the RBA, so they're going to be very focused on it.
So this adds to the case for a rate rise at the Reserve's next meeting.
Well, that's been the reaction from the bulk of economists. The Reserve Bank next meets on the 11th of August. There's no meeting in July. Now, Capital Economics says that the RBA is very much likely to look past the volatility of the headline read and focus on the underlying read. That is also the view of Brendan Rynne from KPMG, who I spoke to earlier. We still have jobs numbers to come tomorrow. The unemployment rate sitting at 4.5%. It could fall further. It's a tight unemployment. It's a tight jobs market. There's more reads on inflation to come before August, but based on these figures, Brendan Rynne says an August rate rise is almost a certainty in his opinion.
Certainly one more rise is guaranteed. The next rise, I think, is uncertain. And the reason why I say that is that our own forecasts of core inflation see core inflation starting to drop. This is the peak of core inflation, the June quarter of this year. Our expectation is that we'll see core inflation drop down to about 2.8% by the end of the year, but still hover in the high 2% range over the next 18 months or so.